and 19, and today I'm going to go through everything with you, exactly what happened. The most important news was both positive and negative. And I would say let's just finally get started. So what happened? Iran negotiations are currently underway, and as a result, it dropped from $105 to $101. The S&P 500 is posting its 6th consecutive weekly gain. And the portfolio at the moment, so my portfolio or those of other hard asset investors as well, they are currently receiving dividend increases or special dividends in succession. For example, International Seaways is paying $4.55 and Dorian LPG is paying an irregular dividend of $1. Devon Energy has fully completed the Coterra merger and is launching an $8 billion buyback. But there is also some painful news, and as always, this currently concerns the right sector. I would say, let's get started. Market situation at the close of the week on May 9th. The S&P 500 closed at 7,398 points. That's an increase of 0.84%, up 2.3% for the entire week. That's 6 consecutive weeks of gains, and that's the longest winning streak here since 2024. The driver was a much better than expected April jobs report on Thursday, plus the hope for an Iran deal. Brent is the story. The price crashed from $105 to $101, which is nearly 3%. So, a crash. Witkow and Kushner pushed forward the Iran negotiations. Both sides are working on a memorandum to end the war here. On Thursday, there was indeed a shot fired, an exchange between the US Navy and Iranian drones in the Strait of Hormuz, but the talks are continuing here. Vessel traffic through the strait is still at nearly 5%, and that remains, of course, bullish. For the entire tanker sector, gold is currently at $4,732. Despite hopes regarding Iran, there is no crash at the moment, because the payroll numbers have dampened expectations for a Fed rate cut and Powell's course remains mixed. Now let's move on to the Iran talks and the Trump tariffs. There were 2 geopolitical issues. Currently, first of all, US-Iran negotiations with Cuff and Kushner have used Pakistan as a hub. Iran is reviewing the US proposal. Both sides are moving toward a memorandum intended to end the war. Here are Trump's conditions. A complete and secure opening of the Strait of Hormuz. Iran says first Hormuz, nuclear program later. And that is the core problem. And on Thursday, there was an exchange of fire. Iran fired rockets and drones at 3 US ships. The US struck back here, and yet the talks here simply continue. Brent reacted sensitively. Secondly, Trump is once again cracking down on Europe on May 1st. The announcement, 25% tariffs on EU cars and trucks. Implementation success. This week, reason the EU is not adhering to the trade agreement. BMW, Mercedes, and Volkswagen are the most affected here. BMW's earnings could drop by 12% this year. Mercedes could even see a 14% decrease here. And ultimately, this is simply an indicator of Trump's policies. And in the end, it's also a clear signal for anyone speculating on European car stocks. Right now, I'd say there are a lot of factors that such investors need to pay close attention to at the moment, and that's just how it is. A report for the EU auto sector. A 25% US tariff would mean a $10,000 surcharge per €40,000 car. For cars, the impact is simply in the double digits. So here too, you really have to watch what ultimately happens. Now let's move on to a somewhat more positive topic, namely the special dividend highlight, and this time it's international. As you know, the Q1 numbers were simply incredible this time. Net profit of $286 million. That's 6 times as much as the previous year. EPS at 5.75. But the real highlight is the dividend, 4.55 per share, of which 4.43 is a special dividend and 12 cents is the regular dividend. For me, that currently amounts to about $91 for Q1 alone. And that's the largest quarterly payout in the company's history. And the situation at the Strait of Hormuz is pushing up the spot rates. Internationally, you see the company passes the cash flow directly onto its shareholders. The payout date is on the 26th June. That's finally bullish. For a complete tanker, Hormuz discussion plus with Beck's teacher, tankers are driving the spot rates. The payout ratio here is at 85%. Now we come to LPG, and here it's the case that but LPG is paying a special dividend of $1 per share, or rather an irregular dividend but LPG does not pay regular dividends. Ultimately, it pays out. That's significantly above the 65 cents from last quarter and 70 cents before that. With 91 shares, which I currently hold, that's about $91 for me here. The payout here will take place on the 28th May. Yes, and Dorian is currently trading roughly at its 52-week high at $40.33. The stock continues to perform well, the LPG market. It continues to benefit from the Iran spillover, and alternative LPG routes remain in demand. Let's move on to CMB Tech, and CMB Tech will report its Q1 figures on the 19th of May ultimately. That means there haven't been any relevant news so far. But here too, the dividend has already been partially increased. CMB Tech is simply, in my opinion, also just a very large player in the shipping sector by now. I also hold the stock for a very long time. Furthermore, I will probably hold it for a very, very long time, probably even until 2035 and maybe even longer. The reason for this might even be possible spin-off topics from CMB Tech, but ultimately I could imagine that they might bring all their future assets or their research and development, or perhaps even their individual segments, to the stock market themselves, so to speak, and take them public. That's something I could definitely see happening. Currently, of course, they are not focused on maximizing dividends, but rather on maintaining a conservative dividend. I expect a medium to long-term yield of between 3 and 5% in the end, simply because they currently need a lot of capital to advance their research and also their development. Well, and that is ultimately very cost intensive. But nevertheless, a 3 to 5% yield here with a very good shipping company, I think, is definitely very attractive. And as I said, the others positive aspects, which I'm not actually speculating about, might include spin-off fantasies. So now we come to Genco and Diana, and this is where things finally get really exciting. Diana Shipping makes a hostile takeover bid for Genco, $23.50 per share. Genco rejects this, pointing out that the minimum value here is $25.80 and the median, that is the average, is $26.50. The offer runs until the 2nd of June. Genco has also released its first quarter figures in parallel. Dividend up 133% to 35 cents, and according to the outlook, even 70 cents, which is an increase of 367%. So this is finally exactly what we want. Where can we already massively benefit here? I'm curious to see what kind of cash flow my portfolio or my shipping stocks will generate for me in 2026. What I want to say is, as you know, I briefly introduced a few stocks from the shipping sector in a playlist, but I haven't really gone into it in depth yet. If you now say, okay, listen, Marco, we're really very, very interested in this topic because it's simply become so relevant in the end, please make a summary video and tell us how things are ultimately going here, which companies you might have, or the stocks and what's expected, what kind of payouts they make, etc., and so on. Then I'll do that for you. You just really have to let me know. And in the end, you're also supporting the algorithm. That means my videos get better exposure, and we also end up interacting in some way. But if I don't know what you, let's say, value, then I can't, well, take everything into account, even if I might actually want to do that. Especially in the shipping sector, there are simply two families that are ultimately super interesting. One focuses on a policy of maximum payouts, while the other is more conservative, aiming for maximum growth and eventual takeovers. So I can really go into more detail about that with you as well, if you'd like. Right now, I just want to present my playlist structure and the stocks I hold to you in full. And once that's done, I can also do some nice things again, like the commodity super cycle, with a bit of setup and thorough, really good research on how that's developing for the future or other forecasts. That's absolutely no problem. Of course, I'll definitely do that as well. But right now, the focus is just a bit elsewhere. If you say, okay, listen, that's all good, maybe go a bit more into the other category, dive a bit deeper there from time to time, then I'll do that too. That's absolutely no problem. You just have to let me know. And of course, I'd already appreciate it if you give the video a like. It helps. As I said, it helps me because my videos get more exposure and I can quickly reach a wider audience. So you support me, and I think the value I bring to you is actually pretty clear in the end. It's just, well, a small way to support me if you simply give the video a like or leave a comment here. Otherwise, let's finally get to the earning tsunami, specifically in the energy sector. Well, yeah. So who just published something? Equinor. Equinor increased production by 9% in Q1. The air and gas field is online, which extends Norway's gas supply to Europe. But the stock is falling because the tax burden turned out to be higher than expected. The first quarter cash dividend has been officially announced. Let's see how things develop from here. Upper clearly exceeded Q1 expectations. We cash 4 increases revenue through cost reduction. The term optionality is repeatedly mentioned in analyst reports, and that is ultimately the real leverage. Nevertheless, the stock is falling in after-hours trading and the market is not celebrating this. However, I must also mention that all the energy values have increased so massively now. And when stocks go up 40 or 50%, if the share price drops 6%, then everyone just says, all right. Now, moving on to Riley. Riley reports strong production, but a GAAP loss due to derivative valuation. And that's simply an accounting effect and not an operational problem. So everything is still running well operationally at Riley. Now let's move on to Helmrich and Pine. And they just reported a loss for Q2 and missed the revenue forecast. Drilling services are ultimately cyclical, and that was, among other things, to be expected. You know, I actually bought the stock when it felt like it was at its lowest point, and by now I'm already well in the green. You just have to say now the rigs are being put back into service, or at least requested when oil prices are higher, because in the end it's also a bit more worthwhile, which is why everything moves so quickly, and of course that's what makes it also exciting. But here too, I continue to hold it in my portfolio, because in the end it will still be needed. It's basically like maintenance, that's how you have to think of it, and everything simply needs to be serviced from time to time. And from that perspective, it's also a very good business segment in my opinion. So now we come to Shell, BP, Total Energies, and Eni. The May dividend round was strong here. Shell doubled its quarterly profit. The war in Ukraine is pushing up the trading margin even here as well. Quarterly dividend up 5% to 39 cents. But Shell has cut its share buyback program. Only $3 billion left for the quarter. The market reacted negatively to this, and ultimately that's an important point to note. So now we come to the REIT sector, and here we have REIT Income. And here, yes, not in combination, it continues to perform solidly. At $1.13, that's up 6.6%. Revenue beats expectations by 11.5%. The $1.13 dividend increase here, the monthly dividend rises to about 27 cents according to guidance. The guidance for 2026 was raised to 4.41 to 4.44. The investment volume forecast rises to 9.5 billion. And that's solid. What does that mean, I wonder, for the net lease? REITs under 13 quarters. Dividend streak, investment volume was increased here, and the private capital segment is scaling up. What I want to say here about the REIT sector, or rather when it comes to income, is that this is one of the larger ones which are also not as fast moving or as volatile anymore. So here you really have a very good dividend, which is also not very volatile and more or less retains its value, so to speak. And the thing is, in the end, well, the dividend continues to be increased. I think it's currently around 5%, but I can gladly check that again if you like. But that's not really important for now. But in any case, it's definitely a statement here. 113 consecutive dividend increases. And that's very nice. I'll just say that briefly. Now let's move on to average trust. And here's where the pain comes in. But first, the quarterly dividend is at 17 cents per share. The reasoning here, more volatile interest rate environment, longer timeline for distressed loans, target of $250 to $300 million. ROE by the end of the year, Q1 earnings per share at $0. And that's missing the expectation. So what does that ultimately mean? Well, personally, I only get $18 per quarter now, and that's about $73 a year. Previously, it was significantly more in the end, but that's just part of it in the end. We're simply in an interest rate environment right now where REITs are ultimately suffering. But of course, the management's logic is absolutely understandable, that they're ultimately cutting their dividends here. It's also quite clear, with the current higher for longer interest rates, that's obviously not very good for REITs. So what's the current situation, so to speak? Bearish for mortgage REITs and higher for longer interest rates. As I just said, that's simply not the case. It's not beneficial. Let's move on to essential utilities. And that's an interesting stock. Why? Essential utilities deals with water treatment, and that's a topic that will last for a very, very long time. So what does it mean? It will last a long time. It's simply, in the end, well, I would say it's also crisis-proof, and water treatment is becoming more and more of a major issue. That's why I also like to buy more shares here, especially when I see that the stock is cheap. So what happened specifically with essential utilities? On the one hand, they missed their earnings forecast, but revenue was actually a positive surprise. Ultimately, what's more important is the merger with American Water, and that has just received approval in Kentucky. That means the merger is also moving forward here. Now let's move on to UnioQ. UnioQ reports Q1. The report is still ongoing at the moment. In the end, there were no major surprises here. And the pipeline volume remains solid. And with pipelines, for example, it doesn't really matter how high the Brent price is. After all, they simply received their amounts based on the volume. So what else do we have in the end? And there's one more quick thing I'd like to show you. We also have further updates from Valen and UPS, which I'll address now. Furthermore, it's like this. They are reporting a Q1 speed with revenue of $14.45 billion. EPS here is at 75 cents, both of which are above expectations. The annual forecast is confirmed at 59.5 to 62.5 billion in revenue, which corresponds to $2.8 to $3 EPS. Q1 dividend is at 43 cents, and that results in a forward yield here of 6.5%. But be careful, research expenses are weighing on profits and tariff risks are explicitly mentioned. Forward statement. But of course, it still remains a solid position, and here too it is definitely well placed, which is why I also like to have it here. This stock is in my portfolio, and in my opinion, the dividend is already very good. What else do we have? What else caught my attention here in Congress trading? There was actually a trade, namely by Susan M. Collins, and it was in the Senate. And it was a purchase, so a buy. Between $15,000 and $50,000 worth of shares were bought here. And that was on February 3rd, 2026. We can also quickly, maybe just briefly, analyze the stock. And then let's just see what we can find right away, as I said. Price at $25, current dividend yield at 6.7. As we said, days range up to 52 weeks. It's now at $21, $97, and $18.75. As I said, I also like to take defensive stocks, so to speak. Here, roughly between $4 and $5 would actually be a pretty nice entry point. So at 24,650. So what else do we currently have? This shows a bit that we're a little oversold, but I don't really want to go into that too much. What I'd actually rather talk about briefly is this. Now I'm actually already done. And that's because I actually wanted to briefly show, yes, as you could ultimately see here as well, because it was supposed to be a quick date display, but it's acting up a bit right now, or we have to fiddle with it. Yeah. So let's say the absolute low point is really somewhere between $24 and I think probably around 19 euros, or well, also here you can also see people who might be important accordingly. Currently we are here and here as well, ultimately. So yes, I could imagine that maybe we'll sweep through the next zone here, which we might do, because as we can see here, there are like some clusters. In the end, there were just a few, let's say, yes, sellers and buyers, transactions that ultimately struggled a bit, where you could see which direction the price wanted to move in. And ultimately, the buyers started to gain the upper hand here, and then it was pushed down again. And yes, well, in the end, it doesn't really matter. The important thing is that we managed it here. Also, trading out of it doesn't matter either. It shouldn't be made out to be such a big deal now. But that was just a very brief little analysis that I wanted to show you quickly so you can see as well. Here, there really was a feeling of hitting the low point, or if you zoom out for a moment, you can already see a bit of that since then. Yes, okay, that's basically it. As I said, Pfizer is still important, I would say. And as I said, for a defensive strategy, I would definitely keep it in the portfolio in the end. 10Q1 2006 and 20, 14.5 billion, 2.7 billion times net income earnings per share. At 0.47 free cash flow, at 2.2, dividend paid was 2.4 billion, and we have a payout here of 112. Current debt is at 64.5 billion and cash at 1.7 billion. Here we now see the previous quarter where cash was increased a bit more and debts were also somewhat reduced again from Q4. Well, what else do we have? According to current analysts, we see a price target of around $27 here. 40, which would correspond to an upside of about 6.7%. Okay, so they didn't really go into that. But I just wanted to show it briefly because that's just my personal opinion. I just find it very interesting, that's all. Especially since it also pays a good and steady dividend. And here too, that's kind of the case. There have already been some stronger buyers stepping in here as well. I would have liked to show you exactly when that was, but that's just how it is. That's basically all there is to it. We were just talking about that. In general, I just wanted to show you something quickly. Exactly, let's get to the point. Which company has once again missed the CO1 forecasts? The stock is dropping after hours, it's currently weak. The Indonesian subsidiary PT Valen is reporting its own CO1 figures. And yes, in the end, I would definitely hold on despite the mistakes, and yes, things will surely turn around again. In the long run, things will recover again eventually. Then UPS, which is also in the defensive sector, they are keeping the quarterly dividend stable at $1.64, which also results in a forward yield of 6.5% in the end. 3-year performance. Here, however, it's at 43%, and currently, well, you just have to know that if the stock has fallen 43% from its high, then it's probably very close to the second. Could this be close to a 2-week low, and might it even present one or another entry opportunity here? So what else do we have in the end? What else can we ultimately observe? And of course, this is not a recommendation or an investment strategy anyway. In the end, it always depends on each individual, how they want to handle things or which stock they want to buy. Well, I've already shown a bit of the big picture, giving an idea of where things are headed. So let's summarize that again. Energy is completing the Kutera merger. And this is an all-stock deal that has gone through and is now coming up, with $8 billion in the WEG program. That's equivalent to 15% of the current market capitalization plus a quarterly dividend of 32 cents, and that even results in a gain of 33% here. And this is clearly a capital return story. Permian and Marcellus now under one roof. Newmont delivers record cash flow, Q1 EPS at $2.90, that's 33% above consensus, free cash flow here at $3.1 billion. And the board has approved an additional $6 billion buyback program. With gold over $4,700, the gold mines are flooding the market with cash, and Newmont is simply the benchmark here. The benchmark. Now let's move on to Stellantis, and here the company is returning to profitability. Q1 at 377 million euros after a loss in the previous year, sales up 6% to 38.1 billion. But the UAW is voting this week on a strike at the Sterling Heights plant. The Ram 1500 pickups are produced at this plant, and that could impact Q2. And now, just briefly, something from my perspective, which I also mentioned at the Luxens event. If after such a long time a company is finally making a profit again, do we really need to go on strike right away? Or how do you see the whole situation? Why not just let them have another quarter where they can earn a bit more? And then maybe you can negotiate a few things afterwards. But you don't have to, just because a company is finally doing well for once, immediately respond with things like this. In the end, it just puts a strain on things. Now let's move on to another topic from the Novo Nordisk sector. Here, Novo Nordisk is finally delivering the Wegovy pill in the US. And that's over 1 million users in the first wave. The annual forecast was simply raised slightly here. And in the end, that's also somewhat relevant for the current pharma series. As you know, that's currently continuing as well. So now we've already covered a few things regarding the sectors. Where is capital flowing out and in? Here, it's flowing into technology. And where is it flowing out strongly? Out in healthcare, finance, and basic consumer goods industry and raw materials. So you can now also see where things are ultimately heading again. And here in the hard asset sector, capital is flowing into containers and a bit more into tankers as well. Yes, with mortar trades, capital is ultimately flowing out as well, and it's flowing out of gold mining, BDCs, and coal too. It should also be mentioned that, for example, with Thungela, as you know, there was a 40% gain. It just shot up within a few weeks, so it's only natural that some people are now taking profits. That should be completely clear, and we've already covered a few positions here. The most important things have already been addressed. We can take another quick look at what this information will also be critically important for the entire upcoming week, especially regarding all of the major macro events. So, once again, let's summarize very briefly. What exactly will be the most important things to watch next week? So first of all, ultimately, the Iran-Hormuz situation. If the US-Iran memorandum is signed and Hormuz reopens, Brent could fall below $90. Or, on the other hand, if there is another exchange of hostilities and the whole thing escalates, it could quickly shoot back above the $110 mark, so to speak. That means we have a spread here, a range of $20. That's just really a lot. It's crazy, but that's just how it is. It could finally go one way or the other. Yes, as you know, the tankers of course continue to benefit on both sides. Ultimately, yes, Hormuz is currently closed, and that is pushing up the spot rates, and Hormuz is pushing the entire volume. Then on the 19th, we have May CMB Tech will release their Q1 figures, and that's ultimately also an important date. And ultimately, that's a Belgian mixed operation consisting of tankers, LNG carriers, and bulkers. Expectations here are, of course, solid numbers and also high spot rates. But I'm curious here, especially with the base spot rates, whether they might even continue to increase the dividend or if they'll rather retain it and invest instead. I'm just curious to see what happens. So, what else do we have? The other Q1 figures are now coming in at Ambridge as well. And overall, expectations have already been exceeded here. Suncor continues to deliver, and many Canadian energy players are also reporting. Plus, the EU utilities and defense stocks, and the earnings season is now basically halfway through. And furthermore, the Trump tariffs are finally coming into effect. And this week, the 25% tariffs on EU cars will be activated. And this will trigger a reaction from the Frankfurt side. And that's something we definitely need to keep an eye on, especially if you're invested in the auto sector. Well, I'm partially invested myself, as you know. So in the end, it's all bullish for hard assets. The first quarter earnings season ultimately confirms the cash flow thesis, and also the special dividend thesis, the buyback thesis, and capital returns are at historic highs here. So the takeaway from this week that you can keep in mind is this. Special dividends are really the story of the week for the entire shipping rates or shipping sectors across the board. Then the Iran negotiations, which are taking a breather, but the Strait of Hormuz remains closed and tankers continue to be profitable. But Realty is suspending its dividend, which is ultimately a bitter pill to swallow. Mortgage rates remain under pressure in the higher for longer regime, which is something we've been discussing all along. Realty Income hits 113. Dividend increase in succession. Pfizer confirms its annual forecast. And finally, the boring names. Will Trump tariffs be sharply implemented next week? Possibly more first quarter earnings here. Volatility remains high and present here. Of course, none of this is a buy recommendation, but simply my personal strategy. At this point, I would appreciate it if you gave the whole video a like, and also if you aren't a subscriber yet, I would be happy if you became a subscriber now. And if you don't want to miss any more episodes in the general Hearts 4 area, yes, otherwise I would say take care of yourselves and your capital. I'm looking forward to the next video with you and would say until then.